Hey guys, Mike here. So, oh boy, what a volatile day in the market, which of course every FOMC meeting is. And we're going to get into the charts. And of course, one index did not like what Jerome Powell or the Fed presidents had to say, of course, which we've been kind of talking about and everything. And I'll show you why. And I'll also show you, two things that just is mind blowing to me how skewed the numbers get with these stocks. But I did discover, not discover, but I'll show you a way at least if you want exposure to NVIDIA and Microsoft and Apple for a much cheaper way to do it, unless you just have a lot of money to pay. What is it? NVIDIA's like $450, Microsoft's $3 something. What is Apple at $185 now or something? If you have that kind of money to throw around, don't worry about it. But I will give you something that's pretty direct exposure to these stocks, and I'll show you why. But getting into Jerome Powell, what they had to say, I'm going to show you one clip because, as I've said in the Discord, watching that man, he has the personality of a turnip, okay? And so it's painful. Don't waste your time. But the highlight, which I kind of wrote down, one, I'm not sure what this means, and let me know if you do. I assume he said the next Fed meeting will be live. He said it 2 or 3 times. I don't know if that means there's going to be a camera in there. We get to watch and listen to what they're saying. Not sure why they'd even do it, but hey, that'll be fun, right? That's one thing. The other thing is the models don't work. When he was asked, why are you doing certain things, they said, well, we've projected 2 years now on inflation and been wrong. And so, again, I've discussed that in the past. Their models are broken. The other one was, which I thought was a good question, and it makes no sense to me. They said, why pause now? If you didn't know, they didn't do a rate hike. But, why pause now and then talk about more rate hikes, which I'm going to show you the dot plot. Maybe even July and stuff. Why? Because, and why it makes no sense is because by the time the July meeting rolls around, the only thing they're going to have at their disposal is another CPI report. Headlines trending down with core maybe stuck, and then of course unemployment. Like what major shift in unemployment is going to happen in the next 30 days? Maybe we get a big one. Probably not though, right? But all the major stuff happens like 2 weeks after that Fed meeting. We get banks reporting earnings. We get a data dump from also banks and lenders all over the country about the credit market. Ooh, that'd be something pretty important to know, right? And of course, when he's asked, it's just this Babylon answer. It makes no sense whatsoever why they did it. And it's like, okay, great. And so, and of course, maybe what it is, only I can think they're trying to just put uncertainty in the market. Maybe they don't like to surprise the market, but just keep that uncertainty out there. Like the market cares. You saw what the Qs did afterwards, right? And so, which you will if you didn't see it, but again, didn't make a whole lot of sense. But again, I'll show you how many rate hikes because a lot of them have more than one rate hike planned, right? But the one clip I'll show you, which just made me laugh. It gave me a chuckle after sitting there for almost 45 minutes. Was this one right here?
So I want to go back to comments you made about in the past about unsustainable fiscal path. The CBO projects the federal deficit to be 2.8 trillion in 10 years. The CBO also says that federal debt will be 52 trillion by 2033. At what point do you talk more firmly with lawmakers about fiscal responsibility? Because I'm assuming monetary policy cannot handle alone the inflation or keep that inflation in check with the higher level spending.
I don't do that.
Nope, he don't do that. He went on to say, basically, in a nutshell, he ain't going to stick his foot in that fire because it would be a waste of time, right? And he don't want to, I don't know if you ever seen him when he goes in front of Congress. They just roast him. So he's like, he ain't going to be able to help that runaway train anyway. And him and other people, if you're not aware of it, have said that, and I agree with him totally, it's not the top number that you're getting to, it's how fast you get there, right? Now, I hope we can all agree, and everybody knows says this, at the rate at which we're accumulating debt, not just over the last 2 years, not just the last 4 to 6, but over the last at least 15 years, it's unsustainable. It just is. And so that's where we're at on that. Let me know if you agree with that in the comments. But the dot plot shows, and this is the big thing, is that the majority of members, you can see they're right between like 5.5 and looks like 5.75, I think that is. You can see this is 2023. The next group of dots is 2024. But so the majority, that puts you at right between 2 to 3 rate hikes, right? At least 2 rate hikes, more, right? That's where the majority are. And this right here, he says that 12 officials see rates rising to a range of 5.5% to 5.75%. We're currently 5 to 5.25. 4 more officials have at least 1 more rate hike, and then 2 have no more rate hike. So you can see 16 have at least 1 more rate hike. Now, what was interesting though is I don't think they're forecasting a recession anymore because they changed their GDP, right, what they think, and there's no real recession there. And they also changed the unemployment number they're projecting, which of course their models have been wrong, but still they're raising them up. But it's like unemployment was, I think they were projecting 4.3. Now they're projecting like 4.1, right? And so I don't know, because they didn't say anything about it, I saw. projecting a recession. They projected a mild recession last time. And so that's interesting. As of course, every firm has done what? They've pushed their recession, if they still have it in there, back to like first quarter 2024. Now, of course, we did get some more news today. We had PPI come out and everything. And you can see, producer price index, it's fallen off a cliff since 2022, right? So this is what producers are paying their prices and stuff month over month, year over year. And of course, we know other input costs have come down. Unfortunately, it just don't seem to be rolling into core when it comes to it, which is less food and energy and stuff. And so that's kind of a problem. And you can see right here where obviously the inflation is coming from. And it's pretty obvious, right? It's services, right? Ex food and energy. That's a pretty big chunk there, okay? You can see energy at the bottom is falling off a cliff. But you can also see where else is coming from. Food, right? Food is still a problem. And so, how they going to get that down? That's a good question. The only way, they know to get it down is try to get people unemployed where we can't go out and spend the money, basically is what it comes down to. And you would think, obviously here's the M2, yearly growth versus inflation. Obviously it's fall off a cliff. It's in the negative territory. Obviously you would think inflation would go along with that, which seems to be the case, but we will see how this works out. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Now, of course, what do we talk about here? The IWM, right? Terrible environment for small caps. And this thing must have known what was going on because it sold off at 10 a.m. It didn't even wait like the other indexes. It just said, let's go ahead and sell off now. But you can see on a smaller time frame, sold down, big drop when the 2 o'clock data hit about them maybe doing 2 more rate hikes, V-shaped recovery, at least at that point, and then sold off a little more at the end of the day. But when we pull up the hourly, you can see, and the key number to put in your head is 189-ish. You got to close above 189. I was talking to you yesterday about this level right here. Like, everything's for nothing if you can't get through this, but you got to close above 189, okay, and turn that into support first. That's what has to happen now. Of course, and you can see the MACD looks like it wants to roll over. RSI might be telling us a story there. We'll see how that plays out. But again, who didn't like it the most? Regional banks. This is what puts a lot of pressure on them. They went red immediately. Okay, and what does the IWM and IWC make up a lot of? Regional, smaller banks. Okay, and this is just a few. But yeah, they turn red with a quickness. We'll see if they get an oversold bounce tomorrow. And by the way, I just want to say this is pitiful. Look at this right here, guys. A picture's worth 1,000 words. And this is the unrealized gains and unrealized losses on securities at commercial banks in billions. Look at 08. And then look at now. Look at any point in time in history and look at now. Look at this. That is insane. This is one thing I was talking about. That's nuts. All right, these people are supposed to be professionals. They have degrees in this stuff. And I say that because I know you may have been one of them, but I have a neighbor. Like, he's not in the financial business, don't have a finance degree. You can call your bank, by the way, and you can ask them, and they have advisors there that will help you with your money, right? And I know for a fact, like, these people were telling people to buy bonds before the interest rate hikes, right? And look, I've been very honest. For the last year and a half, I wasn't into bonds before this whole thing, this whole crash happened, and all of a sudden, bonds, inflation, this and that. But you know what? I'm somewhat educated. I have a couple degrees, so it took me 2 minutes to pull up a chart and say, ask Google, and now you can ask Chat GPT, right? What happens to bonds when rates go up? And there's this great chart that goes up, and it looks like this, right? I'm sorry, here's the rates, here's the bonds coming down like this, right? And you're like, what? That's not good. And these people are telling people to go out and do it. I'm like, and somebody said, and maybe this is the case, and this is an even dumber rule if it is, that, banks have to have so much invested in X, Y, Z, or whatever it is. Man, come on. Okay, then my response is, can we see we got a problem? Can we see we got a problem? And we can also look at that and go, if the Fed didn't step in and do what they did, look at that mess. Look at that mess. Okay, that is crazy. And these aren't like some homeless people making decisions that never been in school in their life. It's just shocking to me, and that's what I tell people. Everything's not a problem until it's a problem, but think about all the off-book stuff we don't even know about that banks have. And I'm talking about the losses. We don't even know about. We'll never know about, hopefully, because if we ever know about it, something went really wrong. I know Ray Dalio talks about it all the time and everything, a bunch of other big wigs do, and they have access to that stuff, I'm sure. We will never see it. But yeah, that's insane. But what makes me more mad is the fact they're out there advising people like you and I to follow their route before it ever happened. That's nuts. Anyway, Obviously the Qs, another V-shaped recovery, as you can see right here. I mean, it sold off, all that good stuff. But I mean, look at this thing. Overbought on the daily, overbought on the weekly. And, you got to get a break at some point in time. What level that's going to be, we're going to have to see. Now, check this out. The XLK, all right, technology ETF. You saw the price in this thing. Look at this thing right here. Let me say this. 2 stocks, which is Microsoft and Apple, make up 47% of this thing after today's move. This ain't counted in there yet. You count NVIDIA, which, by the way, today's move, this will change tomorrow, but NVIDIA and Abgo in there. And let's see, what is that? 57. So let's just round it up. 60% basically is what 4 stocks make up of the XLK. And you saw the price of that, right? So if you pull it up on a chart, you'll notice year to date, I believe, and I'm trying to memorize these numbers here, XLK is up 46%. Microsoft's up 53%. Apple's up the same as the XLK. Obviously, NVIDIA's over 100. But, this is what I was saying about exposure. If you're looking to have exposure to Apple, Microsoft, and NVIDIA, and you don't have, I guess, combined, if you want to buy 1 share of each, you need about, what, $800 now? You can buy that and have a good return. Now, of course, it's overstretched like crazy. But again, maybe when they got a good pullback, if this is a bull market, that gives you exposure, and it gives you a lot of exposure because those stocks, maybe you want to throw an Adobe in there, those stocks make up 60%. So the other, I was thinking about, and I think there's, I think there's 67 stocks. There's 67 stocks in XLK. So imagine that 4 stocks make up 60%. The top 10 make up like 72%. So that's 28% split up by the other, what are we at now? 57 stocks. So the other 57 stocks can have disastrous days and you won't even notice it. Now the other flip side of that is the other 4 stocks have disastrous days. The other, I guess that would be 63 stocks have great days. You won't even notice it, right? I mean, that's how it is. But if you want exposure, that gives you exposure. So just FYI, it's a heck of a lot cheaper than the other one. Now, looking at the SPY. Obviously, same thing. I mean, they follow the cues, right? Sold off, V-shaped recovery, jumped up and down, blah, blah. And, with this one right here, obviously oil was down. But one thing that's up on the SPY is all these travel stocks, just FYI. So pay attention to that. Airlines breaking out, cruise stocks breaking out. This is another one overbought on the daily. What level will it stop at? I mean, is it going to be 440? Is it going to be 445? That's the big question. Eventually, any healthy pullback is a good thing. It doesn't mean 20%, doesn't mean 10%, doesn't mean any of that, right? Even some consolidation is good. Now, Tesla's another one, right? It's been in this gamma squeeze, and leave it to Jerome Powell to break the streak, right? Today was the first red day, and I believe in like 15 trading days. Look at that RSI right there. Woo! I believe I mistakenly said oversold yesterday. I meant overbought. But, I mean, look. If you're a long-term investor, man, this is a gamma squeeze. There's a reason why Tesla goes up 100%, down 30%, all this stuff. Because I've showed you the options before. And, of course, not just options, but what else you see happening when it causes these squeezes. It is the most heavily shortest stock there is. 22.96 billion as of like 2 days ago, I believe it was. Who knows what it's at now. And, again, you're going to have a moment where a lot of people, I'm talking big money, is going to say, what is the price target we need to start shaving here and start taking profits, right? And this gamma squeeze will come to an end, right? And the shorts will stop covering, and then finally you'll figure out what the price is when it drops down to settle. Just FYI, a lot of people say 260. I've heard that thrown around, but just keep that in mind of what's going on here, okay? BABA, good sign for BABA. Ends up closing at 89, which is where you want to be, right above that heavy supply there. Make sure we turn this into support and everything is the big thing. It was like the MACD wants to roll over maybe short term a little bit. But, you want to turn this into support now. That is the key. Now, keep in mind, be very careful here because tomorrow China has a bunch of news coming out. It will come out tonight, actually, according to one of my members, around 8 to 10 p.m., I think it is. But so we'll have to see because a lot of people think the economy slowed down. But if they cut rates, which people expect, they do, maybe that trumps the economic slowdown news, or maybe it didn't slow down as much. We'll see if we can recognize the data. But either way, you can see a pop because remember, it's still in that volume gap. Just make sure you're careful on that. Now, NVIDIA, huge day today. I don't know why I'm zooming out so much here. I guess I was looking for the previous all-time high. This thing set another all-time high. It went up like 5%. Even during the Fed meeting, they didn't even care about rates. This thing is like whatever. And I've seen people throw out numbers like 500, stuff like that, where this is going to. But again, another all-time high, overbought like crazy, right, on the daily, weekly. Look at this. Now it enters overbought on the monthly, but I want you to look at this, guys. This thing can stay overbought for multiple years. That's 2.5 years right there. Over the next time, I think this right here was 2 years on the monthly. So, who knows? This one's the hardest I've ever seen to predict at this point in time. It reminds me, I've said months ago, of Tesla. When it started going up like crazy, it can stay overbought for a long, long time. And this will update tomorrow, but I did always like to look at this. I think we'll be over 40 times sales when we open tomorrow when this updates. So how high can it go? Put in the comments what you think. I think it's going to go to 50 times sales is my guess, right? 211 PE. I mean, it's like, oh boy. Oh boy. Anyway, put in the comments what you think about that. Now, earnings, very simple. Just watch out for me at least. Kroger, I want to know how people are shopping. Then Adobe, another AI type play. And so this one's been moving pretty heavily, so watch out for that one. And then the only thing we got going on tomorrow, really, that markets may be listening to is going to be jobs data. You'll have continuing jobless claims. Then you're going to have initial jobless claims, and then you'll have a whole bunch of manufacturing stuff, which people don't seem to care about anymore, but coming out of Philly, all this good stuff. It's been disastrous. We'll see if we finally get something there. Some retail sales data, but really nothing, none of this stuff. The market's not going to care about any of that stuff because it's been horrible and it hadn't cared before. But it is coming out if you want to look at it. And we'll see, because people are just waiting, because the industrial numbers have been so bad. They're just waiting from the bottom and turn up, right? And the market will take that as go, this is bullish, because it's already bullish, so let's go, right? But this is, again, what the Fed talked about. He talked about nothing to do with that. It was all about the services side, right? 70% of the economy is services, and that's what they're asking me. How are you going to slow that down? You don't have a clue, right? You don't have a clue what to do. And even he said the jobs market and the wage growth has just shocked them. Like they never seen anything like it. And he ain't a spring chicken, right? I'm not a spring chicken either. I ain't never seen anything like it. Have you ever seen anything like it? Right? That's a supply-demand problem, and then the wage growth going up, and so eventually there'll come a time where, wage growth comes down. If inflation stays high or whatever, it's still at that point in time, then people will start to feel it. Student loans will kick in. They'll take more money out. But, he was asked about the whole Treasury refilling their account, and, they'll monitor it closely, right? And so far there's been nothing going on with any liquidity drop or anything like that. But, that's where we're at. Let me know how your day went. Hope you got something out of it and stuff like that. If you did, hit the like, subscribe button, guys. Remember, we got OPEX Friday. Well, tomorrow's Thursday, but OPEX Friday and then Quad Witching Friday. And I think it will be the biggest monthly OPEX we've ever had. Trillions and trillions of options and stuff, so worth of options. And so keep that in mind. So you're going to have, it's going to be volatile. There's no doubt about it, right? And I think everybody's just waiting for that time where you finally see profit taken. The big question is, with this news, will people continue to rotate in the Russell and small caps and micro caps or not? That's really what I want to see, right? Will they continue to rotate into banks? That's really what you want to see. Because, obviously the banks have been bailed out. So that if that bailout continues, can they still fail? Sure. They can, but, that's what you're looking for and stuff. And plus, Citadel came out today and said they're going to start looking into and practicing more of credit trading in the credit markets, because they think there's going to be a recession in 2024. Again, they push it out to 2024, but that's where they can make their money, and they make a boatload of money. And I think they're the largest market maker, if I'm not mistaken, if not the second largest. So, just keep that in mind. So, a little tidbit there. So anyway, see you guys tomorrow.